Hey everybody, Economic Ninja here. I hope you're doing great. We're going to talk about the auto loan industry, and we're going to talk about delinquencies and what we can see, what can we expect. Gosh, I got to be honest with you guys. I've got a list of cars that I want to buy, cars that I've wanted my entire life. I'm going to ask you to hashtag the favorite car that you've wanted your whole life in the description below. Just put a little hashtag if you want a Ford Mustang, or just hashtag Mustang or hashtag DeLorean. You want to go back to the future when, inflation wasn't as bad? I don't blame you right now. Let's get the doc and let's go find him. But put it in your comment section, because I'm just going to tell you right now, before I jump into this story, I want a 69 Camaro SS. I want a Lamborghini. I want a Ferrari 355 Spider 1997. I know it's just for nostalgia, okay? It's not to flash anything. I don't know why. These are just on my bucket list, okay? I'm not saying I'm going to go get them. I want a Corvette C8 with the recording studio sort of pretty much built into the thing. And then I want a Shelby Cobra. And so that's my list. So you guys let me know. And then for the other people that just are having a rough day and just want to complain and whine, you could tell me why that's a bad idea. All right, cool. I love that. Let's do it. Just put it in the hashtags in the comment section. Also, guys, remember the silver giveaway. The link's in the description, all that kind of stuff. I got my commemorative coins. There's silver and there's cardboard involved. That's all I'm going to tell you right now. All right, here we go. This story is out of Bankrate. I'm going to link it below, okay? It says auto loan delinquency rates expected to return to normal. You're like, whoa, it's getting better? No, it's getting worse. It means it's actually getting worse. It says while vehicle prices have been going up, auto loan delinquency rates have remained surprisingly low for the first 2 years of the pandemic. That's right. A lot of people were given stimulus checks and went out and bought things that they shouldn't buy, and then they were able to pay them for 2 years. Weird. Unfortunately, this is no longer the case. As the Federal Reserve works to address growing inflation, more borrowers are falling behind on their auto loans, and we can expect delinquency rates to return to normal pre-pandemic levels over the coming months. Now, the cool thing is that what Bankrate's not telling you, but they're just probably saving it for like another couple months down the road, is it's going to get not only return to normal delinquency levels, hey, we always have this many delinquencies, it's about to get a lot worse. It's going to get much, much worse. So just Bankrate's sort of living in the past. I think they found themselves a DeLorean in all of this and went back to 1985. All right, it says, so why did auto loan delinquency rates remain steady? It's a great question. Following the February Fed meeting, new data indicated that federal government assistance helped play a key role in keeping delinquency rates steady over the past 2 years, because many of the Americans receiving extra assistance during... Someone's messing with me. Cops! Because many of the Americans receiving extra assistance during this time also fall under the subprime category. It meant fewer loan originations. Missing loan originations. Okay, so this is really interesting. Across the board, most auto delinquencies come from borrowers with low credit scores. So, with fewer low credit borrowers getting new loans, delinquency rates remained fairly low. Many low credit borrowers did not finance new loans due to less demand for vehicles, with stay-at-home orders and more stringent acceptance criteria implemented by lenders. That's really, really interesting. So you have these, the pool of low credit buyers, and since they're at home, they don't need any vehicles. They're not running through vehicles like they normally would with wear and tear. And let me halt right there real quick and give you a little key too. What I've noticed a lot with people that have low income, and I'm going to say low income mindset, because they're stuck where they are because of them. They're not trying to get any better. They're just dealing with life. They want to be happy and have their head in the sand kind of lifestyle. And so they tend to buy these total beaters, and they just run them into the ground. They don't even do routine maintenance, like, you know what I mean, just to keep them up. So it makes sense that the less miles on the road, because they're not working and they're stuck in their home, the longer that beater outside is going to last. Although the battery's probably dying because there's some kind of voltage leak going on. So here we go. The findings found that the recent Fed meeting reinforced this assumption. Much of the end of 2020 and the start of 2021 were made up of a lower number of loan originations. Did I just read that? Gosh darn, Ninja, get off on a tangent. No, I'm joking. It said these missing originations, as the Fed described them, many fewer delinquency rates. If drivers that tend to fall subject to repossession or defaulting on their loans are not borrowing, fewer delinquencies will recur. Now, This is another thing that I found really interesting, and I think that this is going to turn into being the big story in the next 90 days, 90 to 120 days. So it says 2022 delinquencies rates expected to rise. The strong credit trends, man, Ninja, if you could go back to the DeLorean and change anything in your life, what would that be? Put that in the comment section. I'm going to say right now, I would have went back to 3rd grade in reading class, and I would have learned more. I would have paid a little more attention and stopped checking out all the girls and talking to all my buddies. Those days, man. Bring back the tall socks with the 3 stripes, colored stripes on top, and I'll start reading again. All right, here we go. 2022 delinquency rates expected to rise. It says the strong credit trends during the pandemic are returning to normal levels. Exemplified by auto loan performance in January. According to Cox Automotive's weekly insights from mid-February, loans more than 60 days delinquent have been increasing steadily over the past 8 months, and January saw a 2.9% increase compared to a year earlier. Now think about this. This story is not very old, but they're talking about February numbers. And that's what's really interesting. When you start seeing these stories coming out with this month's numbers, June and July's numbers, when inflation really took off in the springtime, and it's been pressuring buyers, or people that have already bought a car but are paying payments, think about the numbers of delinquency rates then. See, it's funny because we read news stories, and the news stories are always about the past. They're going, well, we're telling you the data from 3 months ago. But right now, we know the pressure. So if you're already seeing people with delinquency rates rising because people are starting to miss more and more payments on their vehicles, and that's from data a couple of months, 3 months, maybe 4 months ago, imagine what the storyline is going to be like in September and October. It is going to be carnage. And when you have bank earnings that are falling because they can't make mortgages, and now next the story is going to be that bank earnings are cratering because of auto loans. Think about what's going to be happening with bank stocks, and then how that pulls down the stock market. Now, how do you make money from this? Let me share a little quick thing. If you're a business owner and you're thinking about buying a vehicle, I'm gonna suggest you wait. All right, and this is, don't take it as financial advice, but just as a word from another business owner. The tax write-off and benefit, if you already have a vehicle that you're doing business with that you can keep on the road, do it. Because the tax benefit you get from buying a vehicle, leasing a vehicle, whatever you do, that's not my position to tell you what to do. It's the same tax benefit if you buy it in December as opposed to if you buy it today for next year. So you just see what I'm saying? So why would you do that with all of this Armageddon coming in the auto market? It's easy. It's better to play the odds and go, hey, I'm going to wait to buy a new vehicle in November, December, especially because that's why they have all the smoking sales, because nobody's thinking about buying cars usually at the end of the year, except for business owners, because they're busy buying Christmas presents, buying other things they can't afford. You see what I'm saying? So I would suggest doing that and waiting. And I would start, if you've ever wanted to flip cars, I'm not saying to run right out, and definitely not right now, but there's going to be a ton of opportunities, because there's going to be so much confusion and chaos as car dealers go out of business, auto loan companies go out of business. I mean, this is the time to start planning right now for what you want to do. All right, guys, I'm going to link the story below. Better get out of here before I get thrown off by any of my buddies. Hope you guys have a great day. The Economic Ninja is out.